Good afternoon, guys. Welcome back. Very interesting, fun day today. Even if you, even just looking at the averages being sideways, obviously that does not paint the picture of really what today offered. Just looking at intraday, just to see sort of the differences between what happened. uh, Completely flat on the day. There wasn't any sort of movement in terms of overall market. We're obviously closed higher on the day across the board, but on the major indices, nothing really happened today, right? We kind of had the stop day, which we talked about the candle yesterday being a little bit bearish, most likely a stop day. This definitely sets us up to continue still a higher low, not a higher high. So again, this was the stop day, so we're looking for what comes in the end of the week. We still are in line for the all-time high sort of dance this week, and so we still have the gap sort of on the cards here, where you can gap right up into that level. Definitely still possible. I'm going to keep mentioning it every day because again, when there is a probability that it can happen, it's important to keep that in mind. And so on the average, nothing, but small caps leading the way here. Now we talked about this a little bit this morning. I obviously posted the chart back here. It's really interesting to see how many points got put on today and how sort of it's very contrary to the rest of the market, where the market, you just saw what we did intraday, nothing happened all day. And then we look at the small caps, and small caps put a ton of points on very quickly throughout the day. And this, again, really leads to that speculative sort of side of things, that when we enter this sort of volatile and speculative time, which when we have retail traders really come back into the swing of things here, where we're going to look at the AMC and GME charts where they did 20% today, there's a lot of points being put on because of rapid buying and not because of an idea to go put it into your portfolio and you're going to sit on it, right? These are just trades. This is specifically being bought to be sold. It's pure speculative trades looking to get in, get out. They're going to be quick. And that can cause a side of the market like small caps, which benefit from that sort of trading for percent gains because it's such a smaller amount of money that causes that percent gain, that you get something like a 2% gain here, which is really only equal to what the S&P did today if you think of the amount of money really involved. And so when those traders really are buying a lot, you can see how it affected this average. Now, let's think about what the small caps are made up of. It's banks, right? And so those regional banks that we saw, those were doing very well right before, and they put so many points on so quickly they needed to consolidate in here, right? We put a ton of points on very quickly. Major banks have continued to do well. Again, that's due to the value centric sort of mindset right now of a long term trade. Small caps do well on this speculative sort of side of things. So we see that big jump today. It's nice because we mentioned it this morning. It's nice that we actually saw it play out intraday and not just sort of trend through here. It'd be obviously we want to see the trend, but it is nice to see that as we see so much retail trading and so much speculative trading, that we actually see it intraday as well, so that these things are lined up and we don't have to, ask the question: is this really due to this, or is it just random that something happened? I think it's really clear to see that it's just due to the impact of the trades that are being placed right now. And so, very nice move here. So across the averages, positive on the day, and then especially small caps leading the way. This should definitely set us up for continued moves. And small caps aren't really that far from its all-time high, but they definitely have the most points to put back on comparatively to the larger caps. So we'll continue to keep our eye on that. So let's first start with the retail side of things because this is kind of the most important factor of today. AMC 20% yesterday, 20%, two 20% days in a row on AMC. This is coming off of obviously a big move from before, and so if you even just look at this move, that's over 60% right there in 3 days. Over 60% in 3 days on AMC. If you don't think that's retail buying or that's a lot of points, then I don't know. That's crazy. That's a lot of points. GME 16% yesterday, another 16% today. That's a lot of points on something that is super supply heavy, right? There's a lot of buying. It's a lot of speculation. It's a lot of volatility that's being added to the market, right? We see it everywhere. We have things like BB that came through, right? and put a lot of points on very quickly this morning, right? This is all happens in a very short amount of time, right? It doesn't take any time at all. 10% in 20 minutes, right? That's a lot of buying, and it's again due to this we got to get in now, that FOMO sort of situation where the spread gets very wide because people are willing to pay any price. They don't care what the price is because they think that someone else is going to be buying higher anyway, right? There are ways to take advantage of this. It's more important the impact it has overall, right? It's not so much that we are a part of these trades as much it is that it can affect the rest of what we see, what we do, because again, when you see a bunch of people rushing in, you can usually try to find a way to take advantage of that, which obviously that's what we do as market participants. We're trying to avoid, situations that are very volatile and or we want to take advantage of it to actually be a part of it, right? And it can have sort of a I don't know if it's so much of a transitory effect or something like that, but things like travel, which were short-term volatile, look beautiful now, right? It doesn't look volatile at all when those tickers start to pop off on the meme side. You get things like travel today, another 3% on AL, for instance. The win trade looked great coming through the resistance. We're now basically out in the open, listed 2.5 today. These kind of trades become all of a sudden they're not very volatile. They look pretty normal, look pretty good, even though these are the most volatile trades we're really a part of, because compared to just trading, value tickers like banks, energy, mega caps, these have been the most back and forth, right? Swinging back and forth, and uncertainty really being the key word. Uncertain of what the future brings for some of these travel tickers, right? If we go through and start looking at some other tickers, I want to mention Viacom coming through. This is obviously the sort of when we talk about the idea of meme stocks and the like, this is definitely one of the ones that we're looking to become a little bit of a meme stock with the possibilities of something of a media merger. If you saw today, Amazon did just buy MGM. So the studio part of it, right, with movies, TV shows, and everything like that, that happened today for $8.5 billion. That on top of the AT&T and Discovery merge, there's a lot going on. So again, I think when you look at the Viacom chart, there's a lot of speculation going on right now that there's probably something here as well. Again, we sniffed out a lot of what was happening with AT&T and just the sector overall. I kept saying this sector, there's something going on. There's definitely still more going on here, right? You can tell how the market is still pricing further as if there is more to come, or it's just good overall anyway for the market to be consolidating some of these things. We saw this with energy as well during COVID, that due to the risks involved with the recessionary sort of pressures of COVID closing things down, we saw a lot of energy companies merging together. And that led to actually much higher percent returns once we've got out of that period, right? When we look at energy now, it's leading the whole year on gains so far. I posted that chart. It's over 50% year to date that oil and gas is up right now. That's insane, right? It's twice as much as the next, which is banks. It's a ton of points, right? This is a very similar sort of idea here that once these start to merge and you start to get a consolidation in a sector, you actually do get a very high return just due to the fact that even if you go from like some sort of fundamental standpoint in a company and business point of view, you just basically doubled profit and the costs are almost exactly the same, right? There's a lot of those crossovers in terms of both, and especially for Amazon, they're going to have to spend a ton of money to catch up in that race of media. Now they don't have to. Now they don't have to continue to do the dynamic of having to create new TV shows, movies. That takes a long time, right? That's sort of the issue, and that's why Disney Plus, for instance, isn't being priced in completely yet on Disney, because even though they have a big portfolio of things, it's still going to take time to continue to build a sort of a media bank, right? And so it's not being priced for that. This definitely helps Amazon on that side. And again, Amazon already owns everything, so it's a fucking conglomerate at this point. It's probably, let's be honest, it's probably going to be a Google Alphabet situation where Amazon's going to have to be split into a holding company, right? Amazon, the web page, and then Amazon Web Services. And then now their media side of things, transportation, those are all different facets. They're vertically integrated in all kinds of other sort of ventures, just like Google is. Google has Alphabet for a reason, the holding company. That's probably going to happen with Amazon now. You're just too big. We'll see if that sort of thing plays out. If they do that, because again, they have been very adamant about not doing a stock split, but I think it's most likely going to come sooner than later. Maybe that's what they'll do instead. I don't know if they need to specifically rebrand. Like in a weird Alphabet situation, you just kind of again you do some splitting in terms of paperwork. So maybe something like that. Maybe government gets involved, but it's obviously kind of a big thing to continue to buy up everybody in, and we just kind of are okay with it. So either way, looking at the social media side, the snap chart continued today. These are like big questions of whether or not these these charts can continue. Facebook is at all-time high. This has been a very sharp rally. We do need to keep it in mind because the sharpness here can lead to just as sharp of a downturn. And again, it's not so much that you can't continue to trend. We just have to be aware of it, right? That your downside increases as that sharpness increases, right? And so when we look at these, just very nice days today that continue to gain, but they are a very volatile sort of part of this, and they've been very nice trades so far. But overall, again, we should be keeping an eye on those. I don't think they're in a bad spot right now. They look pretty good, and as if things go into all-time highs, those will continue, and that takes a lot of the risk off. Looking at just the bank and energy sector, banks were basically break even. The ETF with XLF, you basically are break even. We had again the chiefs of banks testifying today at Congress, and there was like different heated exchanges. Not really anything that matters, I guess. I think the biggest topic was about overdraft fees, so that's pretty good for the market. No one cares, and so in terms of people that are in the market, I don't think anyone has to worry about overdraft fees. Obviously, that's a problem or whatever, but in terms of the market, there's no reaction. But we did have a bit of a stop day on the value side overall. You look at energy. Energy was up almost 1%, but again, we're kind of just coming back from 2% loss yesterday, so reaccumulating some of those points on a historical average sort of view. So value was pretty slow overall. You know, you look at the Dow. The Dow was just break even today. Didn't do anything. The others actually gained a little bit. So looking for tomorrow for value to probably come back on. Again, this was sort of masked a little bit because small caps put all the points on. So you still look at those as basically value because it's regional banks and mostly energy. So we can say value was up, but it was in a different sort of area of the market, right? So I think overall things are very bullish still, of course. And so again, just one day here, one day of a stop. It definitely fit in with what we saw in the candle, right? The engulfing lines across the board definitely get set up there today. Looking at the larger list here, retail stores were all over the place today, and I mean as in clothing stores, pharmacies, every kind of store that sells to consumers. They were all over the place because we also, with the Amazon news, had them coming out saying they're most likely going to be making physical store locations for pharmacies. And so you had things like WBA here, right, making moves to the downside, right? This is completely the opposite to other retail stores that we saw today that are on the upside. So if you looking at some of the larger parts of our list, you see stores, some retail stores that are very much up to the upside. And we talk about like the Foot Locker position, right? These kind of things going one way, and then we have others going the other way. A very volatile day. It's literally just mixed all over the place. And so when you see these kind of moves, this definitely brings this sector back into that very interesting, technical, heavy sort of trading situation where we can just look for areas in which we can take advantage of, whether we're pulling into the low end of a range, pulling into support, or if we're somehow entering a consolidation, looking for the breakout there. And so especially on WBA and RAD, which we had quite a bit of experience in, we were looking to have come off the low. WBA being a little different because again, the way it's sort of traded higher, these are definitely going to be interesting. And again, they reacted to news. Whenever something gets news traded, we always want to attack afterwards, right? Those news traders sort of remove themselves from the equation, and then we can get back in. And so I think this sort of, uh, I think this sort of trade that we've been taking with travel is probably going to get transferred into the retail store section, and you're going to trade it in a very similar way, right? So going to be looking for that towards the tail end of the week. If there's going to be anything noteworthy that we can maybe take advantage of, whether it's a pattern or not, is thrown up in the air. It doesn't really matter. Where is okay? That's up there. Pot stocks. So we talked about retail traders. Well, pot stocks are kind of the retail trade. They're literally the only ones that buy it, other than when things are trending, and then you get every professional trader institution trading the one that matters, which again is GRWG here. Today was a very big day and actually brings us back into a range that we kind of understand. This definitely sets up a very interesting situation because I don't think there's anything that has really changed, right? Nothing has changed in this whole sector. The only thing that's changed is that it hasn't been talked about politically. And that could be a good thing, possibly. It's hard to tell because when we were talking about it before, prices were only coming down, right? And so again, that's like when New York legalized and these type of things. This is one of those weird situations where this is so heavily dependent on regulation, and I'm kind of just turned off and sick and tired of regulation and trying to trade around it, right? We look at China, and China technically should have been breaking out months ago, right, off of the lows. And then for months we consolidated a low because they keep talking about regulation, right? And we've seen this in other areas, right? As soon as that R word gets thrown out, everything just goes in slow motion, and it's not clear, it's unsure, and every chart looks like uncertainty. No one really knows what they want to do, and it creates volatility that we can trade, but it's kind of dangerous, right? You can only do it a couple times. We took this trade back over here, right? This trade back over here, we traded pot stocks off the low because we had trend lines coming from before, and we bought just about every single one, and we made a killing on this move here. This was a ton of points very quickly. We haven't really been able to do that. We didn't do that on any of the other moves. We were looking to do it, and it hasn't worked. Over here, I want to be careful that we don't get baited into taking anything risky. Every single one of those calls are risky. If we turn this into just a retail sort of boogeyman sort of trade, where we're just trying to take advantage of another fool, it's possible to do. It's just, it takes more time, energy. It's a lot more scalpy. It's a lot more in and out. And that would be in the best case scenario that it just has momentum and continues to trend to the upside. That's probably not going to happen, right? It's probably not going to just keep going up here, right? If it did, then that would probably be pretty easy. You just had to be in the trade and get out, and you don't need to guess when the top is. You just get out and go, okay, got my 100%, I'm good. I don't really see that as being the situation here. I think we need to be careful that retail traders, it's different than before. It's different than before, and last time it was pretty quick. You're at the top and then you're down, right? This is probably going to be a little bit more difficult to navigate. So I'm keeping this just sort of on the watch, and we're aware of it. And as I made comments this morning, is that there's some things that we're going to need to just watch go by us, right? We're in very good trades right now. We've gotten very good calls, good signals leading to many different things that we've taken advantage of. When we have a bunch of people all of a sudden buying a lot of things, causing price to go up, some of them we need to just watch go by, and it's going to be okay to do that. So there is the other equation now of clean energy, which again I'm still scratching my head over what exactly we're going to do. If we look at solar today, I know it's hard to see on this chart. Solar up like 2.5%. Not much here, but when we start to go through some of the bigger names traded through 2020, Blink almost 9.5% today. Right? This kind of trade, I'm going to watch. I'm not going to do anything. This kind of trade, very easy to go get hurt on. We made a ton of money on it before, right? It's not the same. It's a different kind of trade now because the prior trade was based on what could happen in the future 5 years from now. Right now, we're trading for right this moment, right? Value trading and inflation-based trading is based on what can you give me right this moment? What can you give me tomorrow in terms of numbers? Plug. Remember, we just tried to catch this at a low 2 months ago, right? We were ready to take it, and then we continued to trend down. We did not want to get involved with trying to buy every low. My kind of trading is that I want to buy something, or I want to have a chart that every single pullback, I have the confidence to buy every time. Every time there's a pullback, we can buy it. That's the kind of bullish chart I want to be a part of, right? If you look at all the value charts, all the mega cap charts, every time there's a pullback, we buy it and prices swing to the upside. And we have at least enough of a baseline to break even or do better, right? And we can always have the ability to transition that position. We can keep pushing the position. These kind of charts here are not like that. You are not able to buy every pullback and get out alive. In some of these, you're losing everything for the risk of, yes, a very high potential upside. But the probabilities are so low, right, that it's not something that I want to spend all my energy on for one trade. Because we want to be consistent over all of our trades and disciplined across the board. This one kind of trade will cause a ripple effect across all your trades and cause problems, right? This is not the kind of trading we want to be involved in unless it's specifically to do so, right? That's not really what we can do. We can't really do anything right now. That's not, we don't have the risk, right? I've talked about my risk right now is that I have 10% on mega caps. That's my risk, right? That's about all the risk I can afford right now. Now, obviously, we have started to put more on some other smaller tickers and on the growth side that's coming out of a low. But then you start to go to meme stocks and trying to do more. Listen, I already made the meme stock trade. I made it back here. I can't make another trade over here. That's why I exited half of the calls right here. As soon as it came up into here the first day, I took half of it, and now I've just sat on the rest, right? It's how different of a trade it is to take a trade down here and then to take a trade over 100% higher. By the way, those are up 100% on the underlying. You know what the calls are worth from over here? Add a couple zeros to it. There you go. That's a different trade. I'm not paying the premium up there. Other people will. This same idea carries over to those other charts. And it's important to remember that at those lows, people that bought at those lows, there's some significant premium changes down there that you just can't go buy them. There are people in there waiting to take profit, and you are buying from the people that bought at the low. Just like down here, right? As I'm selling, it's selling to the people that are buying it right now. You do not want to be in that situation unless you somehow know you're going to be selling them in like 10 minutes from that point, right? And you're not worried about it. That's not really what you would have to do this kind of trade every single day, and you're not going to be able to, right? That's different from 2020. 2020, we did it every damn day, every week. We were exiting 100 positions, revolving them, rotating them every week. There would be a new bio company. There would be a new tech company, right? There would be a new Zoom, a new Blink, a new Neo, new Tesla, every week. CrowdStrike, right? Every week there was a new one. That's not where we are right here. We're a lot slower, and these stick out like a thorny thumb, right? Yeah, it's great to take them, but you should have took it before, right? And that's, again, where you don't let FOMO go and dictate some of those plays. Stick with the long plan. Right now we're on a long-term plan. That's it. You're in long-term trades. We take the risks where we can, but they need to, again, be based on sort of the strategy in which we're taking now, which is to overly protect our downside, continuing to capture every gain to the upside, betting that the market will continue to trend, but not going full gamble mode and just going, you know what? Hey, there's a bunch of fools out there. I'm gonna go join them because I'm smarter. I don't think so. Being smarter not going to help you. It doesn't matter. It's not about being smart. It's not about being a better trader. Those things will not. You can't trade out of those situations. That's one of the first things you learn at an institution. You can't trade your way out of a situation. It's not going to happen. You get your money in, there's no way you can trade your money out. You can't go make another trade to protect that one. Even if you hedge, how are you going to hedge your GameStop position? What are you going to do? You're going to short volatility? I don't think so. You're losing 2 trades now, right? That's not happening. So we're going to stick with it. Value trades are a little slow. A nice stop day today. Guess what? You didn't lose points, did you? You continued to gain, and we gained on a lot of tickers today. I'm gonna round it off and close it out with the Ford trade. This is probably the best trade we're part of right now. We put a ton of points on. So back over here, this candle here coming into the 20th. Looking at this chart, it was here live. It was in the open. It's one of those situations where you have a bias. So again, I had a negative bias towards the EV side, making sure we didn't trade Tesla, didn't trade NIO. I wanted to keep us, out of those sectors because with clean energy, they've been trading down for so long, right? And we included Ford into that discussion. It's been trading consolidation, gaps downs, very much like the Tesla chart has, right? And so it doesn't look like we could really do anything. But coming into the 20th here, so 2 weeks ago, things really, or a week and a half coming into there, this chart looks very different. And the way it came off the low was very much like how we have seen these other growth charts come off the low, and then how value has trended. And so it had basically both properties of both sectors, which is exactly the right spot to be right now, because you want to be able to have, again, I've talked about this, portfolios are basically hedging within the equity market itself with value and growth, not to put it like that broad base, but to get the gains of growth and to take the value, which is the points right now. And so that's why this chart here, this is a major rally off the low here. I mean, it's no joke of a rally in here. This is a significant amount of points all coming at once that you don't really get. And the last time we got it was when everyone went, oh yeah, Ford's an EV company now. Back over here, right, in January. But what happened in January? Everything rallied at the beginning of the year. Everything, right? This is when GameStop started, right over here, and everything got super, super heavy. So this area here, this no other chart's looking like this right now. There's nothing here. And so I made sure on this day to go enter it. Finally go enter this bad boy and said, you know what, this chart is completely different. Been saying the Ford meme of it's built different. This looked very good and looked different, and it's very close to the high. We went in and took a stab at it, have continued this trade yesterday when we pulled into support. Very important not to get shaken out of that position. That's a very nice candle pulling into support. This was the resistance when I posted this chart. This was resistance. Again, we pushed through, confirmed it as support. Here today, a very strong day. I mean, this is a pretty damn big candle to come off of this entire rally to continue. That's a lot of points. There's no reason to think that this is not going to continue up to at least this resistance here. I'm going to be watching this tomorrow as possibly as a transition. I'm a little bit worried about having to exit this position to re-enter it. I think the best way to do it would, if possible, was to buy more yesterday. We talked about this morning of this pullback into support is exactly when you'd want to be buying. And if you're already in, then you're holding. Or you could buy more, right? And you could buy new contracts. Up here, though, we're getting, I'm almost at a delta of 1 up here. In terms of up at this resistance, I'd want to transition here. And so it really comes down to the way in which this sort of bonks this. If tomorrow this hits at open, let's say, which again, that's quite a bit of points. If that hits at open and maybe takes, a complete term, looks like equilibrium gets reached at the resistance and then starts to really sell, then I'm probably going to be looking to take profit. Unless it's just going to sit there. If it sits there, I can sit on this trade for probably a week and a half up at this level. Like between where the candle is now and in this area, between sort of, let's say, 1390 and 1430, I could sit here for quite some time. And so this is about 3% between. It's going to be interesting. And the worst thing to do here is to lose the money. And so if you took this trade when I took it, the best thing to do here is to take the profit home, right? The second thing that we're trying to weigh is how much can we push this further? That should really develop again into a transition question anyway, in which is if I want to push this further, I'm going to need new contracts. I need more exponential here. And so it's basically the two. It is a risk to exit, or it is, it is a risk to try to go buy up at the level. So if you do take profit, you're going to have to wait for the time to buy it, and that's the risk, is that you're going to lose the points which you could have captured because you're already in the position. I think it's going to be a lot of fun to try to figure it out. Either way, taking the profit's going to you're putting it in the bank. So I think this move here was very good, and again, making sure that sometimes we have an idea, but our opinions and ideas about sectors or tickers, even though we were bullish on Ford already, but it was keeping us from getting in because of the EVs. You have an idea that doesn't dictate how price is going to work. All we do is we react to price, and if price tells us something, then whatever you think doesn't matter, right? And so it just is important as always that when price tells us something, you do it, right? If something's wrong or something's off, then you sell, like the Bitcoin sell. There's just some things off. I'm head over heels for the crypto idea, but you know what? Sometimes you're just going to have to get out. And that's sort of the same thing here, which is this is just something we got to get into. So very nice day today. Overall, there's hundreds of tickers that we can talk about that put points on that I'm sure a lot of you have taken note at. A lot of it, again, on some of the growth side of things, right? The tech side that has been doing poorly is doing very well recently, and just overall, fintech, for instance, PayPal, Square Inc. We looked at a very nice day on that front, which we've always had. When the market trades sideways, a lot of our tickers we're looking at do phenomenal. Today was definitely one of those days. A lot of opportunities. That's it, folks. I will see you in the morning. In terms of charts, probably going to be quite a bit of charts tonight. I've already got quite a list going. We'll see what I throw out there. So expect those early in the morning. I will see you guys in the morning as well for the call. Enjoy your night, your afternoon, evening, wherever you are, and see you in the morning.